Let's discuss the picture for other currencies and dynamics of these currencies versus the US dollar. As usual, we start with euro dollar and we start with weekly chart. And I think at the weekly chart, it is fairly clear that the euro is in a rather good position these days. We can see that the key level, which is located at 105. I remember that we had discussed this level before, and I mentioned that this level provides strong support. We can see that in the last week, euro dollar dipped to the downside, but it even didn't reach this 105 level. The buyers returned to the market, and we have a series of quite similar weekly candles here for the euro dollar. The candles with a long lower shadow and 3 bullish candles, which showed that if we judge by the result of the week, the bulls managed to become winners of the situation. The fact that the pair did go lower before it went higher surely means that the bears don't completely give up for the euro dollar, but the bulls are ultimately stronger. So if we analyze the events on the past week, we may see that the pair initially went down to test 106 mark, but this round level, this big figure, provided support. Also, support was provided by the bottom of the daily bullish Ishimoku cloud, and then there was an increase. The pair surged and approached 108 mark. The euro had several sources of strength. Firstly, the pair surged on the weaker US dollar after the Federal Reserve meeting. We have discussed already that. Secondly, there was talk that the European Central Bank would raise interest rate before ending its quantitative easing program. This talk of higher rates in Europe is a rather strong bullish driver for the European currency, as it is combined with high inflation figures, which we now see for the region. And well, we can remember that for a long time we were talking about lower rates, more stimulus in Europe, and now we can see how this trend is starting to change. I think that after the political risks are off the table, after the French presidential election in April and May, we will likely see the market pricing in more hawkish approach of the European Central Bank and the tapering of the ECB's quantitative easing, and this will be bullish for the euro. In addition, the third driver of the bulls here was that the Dutch election brought some favorable results. A pro-European coalition will rule the Netherlands after the election, and the risk that the populist parties will trigger the referendum on the Netherlands leaving the euro area and the European Union has now been eliminated. This surely creates a more favorable setup for the French election, where we have the similar source of fear of the market that a far-right movement will win and pull the nation out of the euro area. Surely Netherlands, with their high turnout at the voting places, made the situation better and increased the optimism about the future of the euro area. So these were the sources of bullish movement in the euro dollar. However, terrorist attacks in France kept gains in the single currency, and in addition, the French presidential election, scheduled on April 23rd, will still limit demand for the euro, despite the fact that concerns have decreased. Still, the main counterparts, Emmanuel Macron and Marine Le Pen, are really close in opinion polls. The situation may change, and some risks remain, and key strategic investors, key large players, may still be wary of holding the euro in the medium term. This is why demand is limited. We are watching CFTC data. We can see that the short positions on the euro are declining, but still it is too early to call this a big change in trend for the single currency. So stay cautious and note that above 107.70, our main targets on the upside are 108 and probably 108.30. These are conservative targets, and for now, I think that it will be enough to bet for the euros advance to these levels and not higher. If we take a closer look at the technical chart, we can see that on the daily chart, we are supported by the Shimon cloud, as I have already said. Also, this brown line of the 50-day moving average is about to cross the 100-day moving average to the upside. At the same time, the pair has surely become overbought, and it became overbought near significant resistance of 108. Here we find the resistance line, which actually started at the end of last year. We can draw this line something like this. Let me make it more visible and see more clearly. So this is the resistance line I'm talking about, and it is situated in the area of 108. So this is a resistance. The pair is overbought, and this combination presents a reason to expect some consolidation and maybe some correction of the currency pair. This line should represent a significant obstacle for the bulls. If the pair managed to close, to show a daily close above 108.50, then it will be surely a strong message that the pair is ready to test some higher levels. Probably better seen here. These levels will be around 109.10, 109.70.